Next time you're on social media scrolling through Twitter and you see people getting hysterical about the Bitcoin price action and the volatility and fear and FUD and optimism, whatever it is, I encourage you to just turn on the weekly line chart and take a look at it like this, because what this shows us is that on the weekly chart, the weekly line chart, since December, we've done, well, nothing at all. Now the wicks, when they're this large, they can play a very big role in what happens next in this trend, because inside of this major wick we saw in the weekly are now a lot of short positions. A lot of people went short on Bitcoin here, hoping for lower prices, which they got, but a lot of those positions have not fully covered yet. And if Bitcoin's weekly closes above resistance, this would give us a sign that the market is starting to favor the bullish side, that the bulls have the control, which gives us reason to have a bullish bias, closing above about 44,000 here, the weekly close resistance box. And so if that does occur and the price is able to run towards this wick high eventually, whether that takes 1 week, 2 weeks, 3 weeks, if we get up to that wick high and you actually get a break above that level, then all the positions that are still short are considered trapped liquidity because they have no choice anymore. The price is above the wick high, all of their positions are underwater, and there is nowhere else to go and squeeze the market. And this is something that really only works in a trending market. And how do you judge a trending market? Well, you look at your EMAs, your exponential moving averages, because they are based on momentum, more recent price action, which is this dotted line right here. This yellow dotted line is important to have at about a 45-degree angle. You can take your trend line out and hold the shift key and it'll snap. If you hit the shift key, it'll snap it up to a 45-degree angle. And that is about the requirement needed to judge if there's enough momentum to have this trapped liquidity play out. You can sort of just hover that above the moving average. And it seems like, generally speaking, this moving average is currently at about a 45-degree angle, those dotted lines. And when you have a trending market with the 20 EMA up at a 45-degree angle, that normally translates to about a 1 to 1.5 risk reward ratio based on the size of the candle that you're targeting, that wick high, which lands us at over 60,000. That is the target for this setup, this theoretical trapped liquidity setup for the bullish side. And a lot of people are probably going to be asking, but wait, what if we break below that low? Where do we go? If the price came back to this low and the EMA is not pointed down at a 45-degree angle, well, then it's not a valid trade. The momentum is not in your direction. So that is actually currently not really the setup. If we are able to break 49,000, right? If we don't break 49,000, then the setup is not really there. If we are able to do that, that's likely going to give us quick momentum because it creates a lot of market inefficiencies where there's multiple factors playing in. We have the trending market, the higher lows, the high degree of demand for Bitcoin right now. And if we break that 49,000 level, we have the shorts squeezing, trapped liquidity squeezing out, general FOMO. I mean, there's a lot of factors that begin to play into this major move that could take place on a break of 49,000. Could easily land us up there. But the other factor that I'm thinking about too is a psychological factor, which is that most people are going to want to be invested before the halving. Anybody that knows about Bitcoin, that knows about the halving, that's been watching the news recently, they're probably going to want to buy before the halving. And it may mean that everyone that's interested in getting in before the halving does get in before the halving, which actually caps growth. It caps the growth we can get in the short term until we find more willing participants from the masses, from Wall Street, to get more Bitcoin. And that short-term cap on growth could lead to a post-halving downtrend where sort of everyone's fully invested for the time being. And then we see a quick sell-off. And that quick sell-off could free up a lot of liquidity for the larger players. That's what the larger players actually need to get into the market. They can't just click the buy button. They have too much money. They need the price to come down. They need some fear to kick in. And that's why we can see a massive drawdown from that target of 60,000 all the way back to where we are now, about 44,000 previous resistance as new support, which is bullish, which would expand our parabolic trend and create a large parabolic advance. Parabolic trend expansion is extremely common. It happens almost every single time we have a parabolic trend. It expands, it gets larger. You can look at this all throughout 2017 Bitcoin bull run. So a parabolic trend expansion would be the ultimate result there. And you would have a major profit taking zone with a major accumulation point, and then up and up, looking for, at that point, we would have Fed rate cuts coming in. The Bitcoin halving has taken place. A really good buy the dip zone for the larger players out there. A lot of liquidity to sort of eat up at that level. A lot of fear also, right? Where a lot of that new money gets scared right out at the low. There's a lot of different reasons why this is quite possible. And it would still be, again, bullish. Parabola, resistance as new support. Now, all of this is very specific as well. It's a lot of speculation here. But just based on my experience and having seen Bitcoin play out its cycles many years, this is the kind of stuff I look for. It's very common for Bitcoin to see these types of major moves, down 27% down, before hitting a major low point, a wick low, and seeing a huge pushback to the upside. This is what parabolic trends are made of. The volatility is going to be mind-blowing as usual. It's always the case. Bitcoin is a very volatile asset, highly risky as well if you don't know what you're doing, right? Other than just holding it. Trading it can be really tricky. So definitely be careful, guys. And we're going to see if this is going to play out. It's going to be pretty easy to track this theory that I have here. And that is going to be Bitcoin closing a weekly above that 44,000 level, continuing to push towards 49, breaking above 49. And if that's the case, we have a lot of momentum. We got short squeezing, we got FOMO, demand, all these factors, the inefficiency of the market that would then take place, pushing us to possibly just above 60,000. Everyone's going to want to make sure they have bought Bitcoin because, oh my God, the halving's coming. Oh my God, the price is going up. Oh my God, we might break the all-time high before maybe one final major dip and then going up again. This is my current sort of outlook. If I was going to be really specific, I've actually talked about this before on the channel, but I wanted to give you guys a really detailed breakdown on what forces would be playing into this. If you guys enjoyed this video, let me know in the comment section below, and subscribe and hit the like button and join the Patreon if you guys want extra content, see what kind of altcoins I'm getting into, and I'll see you guys in the next video.